Hi, Andy. Thank you very much for joining us today. How are things in Southern Florida?
All good here, thanks. Sun shining as usual, and yeah, good to be here with you, James.
Thank you. Andy, I want to provide a framework on where I want to take this discussion over the next few minutes, beginning with a brief overview of benchmark mineral intelligence, an overview of the lithium market in 2021 and 2022, other battery metals, including cobalt, graphite, and manganese, the M&A in the battery metals sector, and conclude with where the lithium price is going in 2022. Andy, why don't we begin with a brief overview of Benchmark? When was the firm founded and what services do you offer and how many employees do you have?
Sure, thanks, James. So we were founded back in 2014, and the specific goal of the business when we set things up was to provide independent and accurate market intelligence for the lithium-ion supply chain. So following that supply chain from anything from the raw materials coming out of the ground right through to the battery cells being produced as they go into your electric vehicles, your mobile phones, etc. So we cover that full spectrum of the supply chain, working with miners, chemical processors, right through to the battery companies and EV producers. We provide price and market intelligence for each step in that supply chain. And the real core around what we do and who we are as a business is everything is based around primary data collection. So it's not about us just relying on public information. We are really able to leverage our network of contacts throughout the supply chain to cross-reference that information, access information that isn't widely available, and really try and provide the most accurate snapshot of what's a rapidly changing and evolving market. So we're now up to around 65 people, the business as a whole, and rapidly growing to meet the needs of the lithium-ion market.
And so with the move that we've seen in the last couple of years, has your firm experienced pretty high growth, especially in terms of hiring employees?
Absolutely, yeah. It's been a constant stream of new people coming into the business, and for us, it's making sure we hire the right type of people that add value, that are able to bring some context from a lot of these areas of the market have long industrial roots, particularly the raw materials, so able to leverage people who've covered the market from that aspect. But the reality is not a huge amount of people have really specialized in the lithium-ion supply chain. So bringing people into the business who understand the fundamentals, but then really layering that with, like I say, what we do at Benchmark, which is really specialized research and market intelligence. So yeah, massively expanded the team over the past couple of years and doesn't show any signs of stopping anytime soon.
Great overview. Andy, I want to move on now and I want to look at the lithium market, what it did in 2021 and what it's going to do in 2022. But why don't we just start with the very basics? There's two types of lithium. There's lithium carbonate and also lithium hydroxide. What's the difference between the two?
Yeah, so those are your two primary chemicals that are used in the battery market today. There's a lot of other lithium derivatives that may be used in the future in other areas of energy storage. But you're right, lithium carbonate and lithium hydroxide are your two primary raw materials for the battery industry today. When you talk about those are two lithium chemicals that are typically used in different types of cathode application. So what is often overlooked in the whole lithium story is it's not just the lithium that goes directly into the battery. There's that intermediate step where that lithium chemical is used alongside all of the other mix of minerals and metals in a cathode material. So in the cathode, you either have, like I say, typically the higher nickel cathode variations that rely on a lithium hydroxide, and there's the other types of non-nickel or low nickel cathode variations that use a lithium carbonate. But fundamentally, those are the chemicals that the industry has been established around for the past few decades. In particular, lithium carbonate, which has sort of been the major chemical up until about 5 years ago, when all of a sudden you start to see a huge amount of interest around lithium hydroxide. And ultimately, the potential for that lithium hydroxide, why that's used in the cathode, is it gives you potential to explore some more high energy density cathode chemistries that typically leverage the lithium hydroxide. So two independent chemical markets to a certain extent, but both going into that cathode sector just in different chemistries.
And Andy, who are the major producers? If I was to look at the top 3 lithium producers in the world, who would they be and what countries are they based in?
Yeah, so really the lithium industry has been based around what we call the big five historically. And those five are SQM, Albemarle, and Livent, who are based outside of China predominantly. They do have facilities in China. And then your two major producers within China historically have been Ganfeng and Tianqi. So those are your big five. Over the past couple of years in particular, you have seen a few of those pull away. You've seen in terms of the scale of production, Albemarle, SQM, and Ganfeng have really ramped up at the fastest rate over the past couple of years. But on top of that, you've seen a huge amount of investment in completely new lithium producers, particularly within China, typically based on some of those spodumene companies in Western Australia that you would have heard of, shipping that spodumene into China, and then a number of major chemical refiners have really expanded quite significantly in that space. So whereas historically it was a case of the big five, now it's a much more dynamic picture. You have a lot more companies at play and capacity being developed, not just in China, which has been the fastest expansion in the market, but you've seen that happen. You're seeing a lot happen in other parts of South America. You're seeing operations in North America, obviously being explored, and into Europe as well. So the landscape for lithium production around the world, whereas historically it had been based around your Chile, Argentina, South American brine producers versus your Western Australian spodumene producers, over the next few years, it's going to become a much more diverse space.
And I want to move on to lithium pricing. I always have a hard time finding the price. Ultimately, I end up going to the Benchmark Minerals website. But why is that? Why can't I get a price on lithium the same way you can on gold or oil? And my sense is it's not a very transparent market. Is this true?
Absolutely, yeah, not very transparent at all, even with the sort of growth phase that we're moving into at the moment. And there's really a couple of reasons behind that. One of those is that it's a specialty chemical rather than a commodity. So when you talk about lithium, even your lithium carbonates and lithium hydroxides, you're not necessarily talking about one product. There are lots of different variations of lithium carbonate, lithium hydroxide that are sold in the market. And ultimately, the way that the markets work historically and still does work today is that that material has to be refined to your end user. So each end user can have a completely different profile of the lithium carbonate they can use or the lithium hydroxide they can use. And that leads into the second point, which is that lithium is not exchange traded. There's not that visibility that you have on the where there's the evolution of a futures market or anything like that in lithium. And that obviously feeds from the fact that we're not a standardized point in the lithium market where there's one specification, there's one adopted price in the market, and that sort of prevents that from having a huge amount of liquidity today, even though there's companies and exchanges exploring that. Hasn't really gained a huge amount of traction just because the lithium market is really in its infancy, even though you're talking about the projections of more than a million tons by the middle of the decade. At the moment, you're in around 400,000 tons. A couple of years ago, that was 250,000 tons. So you're working from quite a small base, small group of suppliers, and like I say, material that really has to be refined for your end user.
So just so I want to understand what you just said, the current demand is for 400,000 tons of lithium?
2021 was in and around between 400 and 450,000 tons.
And it's going to grow to 1 million?
We're on track for over 1 million by the middle of the decade, and by 2030, you're looking at upwards of 2 million tons. So that's the type of scale of expansion you're going to need in lithium supply over the coming decade.
So in terms of pricing, we had a big move in 2021. Carbonate was up over 300%. What were the drivers that took it up so much?
So it's a fundamental, under supply, and I think there's an appreciation from the industry at the moment that the previous 2 to 3 years of that low price environment has actually really impacted. It impacted at the time the supplier's ability to raise capital, to fund expansions, and to ramp up production at the rate that was needed. And really last year, you just started to see that really expose itself. Demand stepped up, not by a massive extent or way above expectations, but there was a step up. And as you look over the next sort of 5 to 10 years, you're going to see that type of step up every single year, significant ramps in the demanded volumes in the market. So what you need, and the issue with lithium, going back to that point about it being a specialty chemical, is that you can't turn the tap on and off as easily in terms of bringing new supply. suppliers are less flexible. And typically, even for the incumbent producers, there's a multi-year ramp-up period to enact expansions, bring them into production, and get them anywhere near their capacity level. So what that fundamentally means is, although you have a lot of potential new projects in the pipeline, potential expansions, they haven't come to fruition yet. They're most likely not going to come, the majority of them, into fruition for the next 12 to 24 months. So what that really leaves is a massive deficit or potential deficit position in the lithium industry. And again, a bottleneck for what is a huge growth trajectory in battery demand.
And this demand is all driven by EVs?
Predominantly, that's the big driver. It's the lithium-ion battery market. Lithium has its roots in, industrial glass, ceramics, greases, that type of thing. The big growth market, 100%, is from the battery sector, and the biggest driver within that is electric vehicles. You also have, longer-term prospects coming from stationary applications. How you can use lithium-ion batteries in your home or in residential buildings, that type of thing. But, and also, of course, in our portables and our phones, laptops, that demand's not going anywhere. But yeah, 100% the biggest driver in the lithium-ion battery sector is the growth in EVs, and specifically what the turning point for demand from the EV sector is coming with the adoption of passenger electric vehicles. We see a lot of e-buses in the market already today, other types of applications where batteries have taken a larger percentage of the market already. But what's really going to drive the growth in EV demand going forward is passenger vehicles. And we're seeing that with the Fords, the GMs, the VWs, all the major OEMs turning their attention to, let's electrify our fleet, and how many of those models can we bring to market over the coming years.
So let's look at the pricing in 2022 and where it might be going. Do you think the current price is sustainable, or could this be a move like we've seen in 2015, 2016 with a big move up followed by a steep correction? What are your thoughts?
So I think the chances of a correction throughout the course of this year are pretty limited. Fundamentally, you just don't see the new volumes coming into the market quick enough to really satisfy all that demand growth. So I don't think there's going to be a correction. I think prices will continue to increase globally as a global average. You're seeing China already at the start of this year. You're seeing prices of up to $50,000 a ton, which is incredible compared to anything you look at historically. So China is a lot more of a volatile market in relation to pricing for lithium. But what that ultimately means in China is usually a good bellwether of where the industry is moving, where pricing is going. And I think the continued increases you're seeing in China at the start of this year ultimately just means that the rest of the world, the longer contract pricing that exists in the rest of the industry, is just going to continue to tick up throughout the course of the year. Maybe not to the same extent as you saw over the course of 2021, but there will be further increases, and that speaks to the scarcity of lithium and the real urgency from consumers to lock in volumes where they can.
So I'm glad you brought up China, because I want to touch on this. China dominates the EV battery market. One of the largest battery makers in the world is based in China, CATL. How did China gain this dominance within the sector, and can anybody compete with the Chinese?
Yes, how China got here is really a good question. I think what I like to use as a case study when we're speaking to a lot of governments around the world, looking strategically at how they position themselves in the EV supply chain. I think, rather than seeing China as a competitor, which is often the first port of call, you can actually use what China's done as a pretty good case study. China committed to decarbonizing its vehicles several years ago. They enacted significant subsidies to start off to really stimulate the growth in that market, and they've supported companies, like you say, the likes of CATL, to become real leaders in each aspect of the industry. But one of the most critical things they did within that period wasn't just to support the electric vehicles themselves, but was to support the massive ramp up in the supply chain. And that's really set China apart from anything that whether we talk about North America, Europe, what they can do from a supply chain perspective will take those parts of the world years to catch up with. And fundamentally, that comes from understanding each link in the supply chain. Obviously, they have a competitiveness in terms of the cost, but they haven't historically had the competitiveness in terms of technology. So they had to overcome those technology issues, whereas it's typically been Japan, Korea, who had sort of been the leaders in this space. they relied on a group of majors to really come into the space, invest heavily, and go up that the learning curve in terms of technology, and then enact scale at a scale that hasn't been seen in the market before, effectively, which allows them to bring down their costs even further. So massive expansion at every link in the supply chain. And where they don't have those capabilities domestically, and lithium being a perfect example, they don't have great lithium reserves in China. They do have some lithium, but it's not the raw material where they specialize, similar to cobalt, right? It's not the raw material that they've come to dominate. It was actually the heavy investment in the refining capacity, which meant all of that lithium from whether it be Australia or whether it be the cobalt coming from the DRC, it had to filter through China to go into the battery supply chain. So that's giving them a really good dominant position in the industry. Whether we can catch up China and the rest of the world, is to be seen, but there's obviously significant commitment to doing that. And I think what's really positive, and one of the things that is being increasingly understood in the industry, is that it's not always going to be a race to the bottom on cost. If you're looking at building out an EV supply chain, what Europe or North America is really committed to doing is doing that sustainably, right? And being able to ensure that the sustainability credentials of the supply chain itself are strong enough to justify the investment in a move towards more sustainable transportation. So I think that's a really positive move, and where it won't necessarily on cost, it's going to be very difficult to compete with China, but there are other areas of value that you can add in this supply chain, which, like I say, we'll see raw material production or the anode and cathode production diversify much further than just China.
That's a great overview of the lithium market. I want to move on and touch on the other battery metals, including cobalt, graphite, and manganese. What are your thoughts? Are you bullish on these metals also?
Absolutely. All of them are going to be very critical to the ramp up in EV adoption over the coming years. The reason for that is there's a small group, the ones that you mentioned and a couple of others, that are really the core raw material components of pretty much, if you're looking at the passenger EV market, are used across the spectrum. Yes, there are some technologies that won't use cobalt or some technologies that won't use nickel. Lithium is the one mainstay across all of them. But what you do have is, if you're looking at the passenger EV market, which, like I mentioned, is the major growth driver, there's a group of technologies which allow you to reach the sort of range, the safety, all of the requirements that are going to see mass adoption of these electric vehicles. And fundamentally, they are based around the components that you mentioned. On the cathode side, it's your lithium with cobalt, with nickel, with manganese in some cases. And on the anode side, it's actually typically just graphite is the primary material. But the question is which type of graphite is going to be deployed. It can be natural graphite, it could be synthetic graphite, and in the future you're going to see increased amounts of silicon as well, which is an interesting one. So there's this group of raw materials, and I think what's similar across all of them is that none of them, with the slight exception of nickel, are what we really typically term commodities, right? They're not standardized products, they're not significant scale today, and they're facing the point that even where they are today, or over the next sort of 2 to 3 years, all of these markets will shift to the point where the batteries are their leading application. It's not just a small slither of global demand, it's going to be the driving force behind global demand for each of these raw materials. And for that reason, as I mentioned, the requirements of those new raw material producers to be able to refine that material to make it battery ready is going to be really imperative over the coming years.
I want to move on now and touch on M&A. 2021 was a breakout year for M&A in the lithium sector, beginning with the merger of Australia's Orocobre and also Galaxy. That was a $3 billion merger, making it the 5th largest producer in the world. More recently, we had a bidding war for Millennium Lithium, and with Lithium Americas becoming the final winner. But what are your thoughts? Are we going to continue to see mergers and consolidation going on within the space?
Yeah, I think we will, and I think it's going to play an important part in ramping up that lithium supply in a timely manner, right? You need the expertise, and while there are early stage developers with really exciting prospects out there, the potential to merge, for some mergers or acquisitions to happen in the space will really accelerate and provide the capital to move those projects forward. So it's going to be needed. The price will justify further investments over the coming years, and I think you're going to see that happen, expand. Like you mentioned, lithium has been a key example of that, but you've started to see that that take place in these other raw material markets as well. So I think, as people look upstream and get a better understanding of what's happening upstream, that's been a big part of the battle so far, has been the fact that people quite often don't understand when you talk past the battery up the supply chain. It becomes all very opaque, and there's, like you say, very little transparency. As people really come to grips with some of the challenges that are facing these raw material markets, I think you will see huge amount of capital flowing from different streams, but I think M&A will play a significant role in that capacity build up.
Andy, as we wrap up, one of the things I enjoy most about Benchmark are the webinars and seminars that you and your team put on. Why don't you provide us with an overview of what you have coming up in the next few months?
I really appreciate that. Yeah, we spend a lot of time. One of the key things we try and do at Benchmark is bring that network of industry contacts together, and events is a key way to do that. So obviously over the past couple of years, we've been a little bit, that's been a little bit curtailed, and we've had to move things virtual, which has served a purpose and will continue to serve a purpose in our business. But as soon as we can, we want to bring things back in person. So we'll continue to have a number of webinars we're going to announce over the next 2 to 3 months. And then our big first back in person event will be held in Berlin at the end of March. So for anyone looking to get involved in the European Gigafactory story, anyone will then be holding those regionally in North America, Asia Pacific as well later in the year. So please visit the website. You can see our events page has all the dates, latest information, agenda, etc. on there. So it'd be great to hopefully see people again face to face and get to do those events once again in 2022.
That sounds like a great event. Andy, I want to thank you for spending time with us today and providing insights on the battery metals sector. To all of our viewers, I would encourage you to check out the Benchmark Minerals website, benchmarkminerals.com. There's a wealth of information on there about everything to do with battery metals. Andy, once again, thank you.
Thanks very much, James.